You've worked on some of the bigger IPOs last year in the pre-coronavirus market. Do expectations change for the type of company that can go public in this type of whipsawing volatility?
Of course they do. Yeah, there's no doubt that the bar is a little different today, given the environment. It's a very strange equity market environment, and the bar is changed. Although, having said that, there's still a fair amount of activity that's happening even right now.
So last year we saw some of these valuations really skyrocket in these private markets. I had been covering Palantir, Airbnb, and even WeWork, as we know, that didn't go public. Is Silicon Valley going to have to come back to reality with these valuations?
Well, it's interesting. I think the valuations are really driven by individual company performance, and some companies that have exposure to the consumer, that have exposure to travel, clearly are suffering a little bit more given the current environment. There are plenty of companies, though, including many software companies, more enterprise-focused companies, that frankly haven't really skipped a beat. And in some cases, they may actually be accelerating their activity. So those companies whose performance has been strong, been able to maintain, or potentially even accelerated, I would expect those valuations to remain quite high despite the macro environment.
So is there a window then that these companies have? Obviously, we've seen this soar in the stock market, partially driven by all of the liquidity being pumped into the system. Are companies looking to go public faster because of it?
Yeah, I think that the sentiment maybe 2 months ago was certainly not not the case. But as you fast forward to today, given the immense support the Fed has been injecting into the markets, given the political rhetoric around infrastructure spending and other bills that may drive a faster recovery, I think that sentiment's changed pretty dramatically. I know a lot of the companies that we're spending time with, just a month or two ago, were quite sure that they'd put their plans on pause. Today are actually getting a lot more aggressive about preparing and considering to take advantage of this market. The market's recovered, I think, faster and stronger than I think anyone would have expected. I certainly would have lost a bet back in March if you'd asked me, will the market be where it is today, 2 months after suffering what we did in March? So it's recovered quite quickly.
So, Cully, what are the limitations here? We've seen a lot of biotech companies come to market. Obviously, that's a specialty for Jefferies. But is this for everybody, this soaring market? Are there limits?
Sure. Yeah, there are, of course, limits. I mean, biotech is an interesting sector. It is one where we're very strong. We've actually done more IPOs this year than any other bank. We've done 18 IPOs for the year, so we're still chugging along at a pretty fast pace. But a lot of those are biotech deals. They enjoy a certain immunity from kind of the macroeconomic ills. They're chasing a defined medical problem. They've got a defined clinic or drug that's in the clinic. They have a defined use of proceeds. And that clinical trial will happen whether the economy is up or down. And so those types of stories can kind of power through the macroeconomic environment. And frankly, they've been among the best performing IPOs so far this year. And a number of those were priced in the April and May timeframe. For other stories, I think you really have to kind of dig deep into the actual individual story and understand what are the drivers of the business. We're seeing more and more technology companies start to get ready again. And again, these are companies oftentimes that have a sales cycle or a sales motion that's focused on the enterprise. Oftentimes they're related to sectors that have actually benefited from this work from home environment. Mm-hmm. Names like communication, collaboration tools, things like that have actually accelerated since we're all in our respective homes working with Zoom and other collaboration tools.
Right. So, Cully, we've seen a lot of deals here, additional offerings, add-ons. We've seen a lot of SPACs. Are you changing the way you structure your team in any way because of these other types of deals that we're seeing?
No, we're not changing the way we structure the team. I have a lot of sympathy. We've got a bunch of folks that are working incredibly hard, harder than ever, given the environment. And it's always a little harder to do our job from our respective homes. But we haven't really restructured a team. We've got a very senior effort focused on the SPAC product, which is another IPO type that has been very, very active. We've done 3 of those transactions just in the last couple of months. And so that team hasn't been changed at all, but honestly, they're quite busy, working very, very hard. We've got a broad healthcare team, tech, consumer. All of our groups are working harder and kind of working more like 7 to 7 instead of 9 to 5.